Galaxy Digital CEO Mike Novogratz says crypto has 6 weeks, so we better pay attention. Plus, crypto whales are aggressively buying this one altcoin project, which is in Wasahington D.C., actively talking to politicians. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, Altcoin Buzz IO, and as always, is not financial advice, and wish the best of luck in your crypto ventures. Also, make sure to join us for X Spaces, Tuesday to Friday at 9 a.m. EST, link down below. Alright, good morning you guys. So starting off today, we're pretty much around the same spot we were yesterday. We're slightly green on the day. We're holding around this area, which I like. We're still chopping around this area and forming a base, which is ideal. If we don't really want to lose this, we could still go back down here and still be in an uptrend on the high time frames, but I'd prefer if we just start to hold this level as a structure and show that we are holding this as a new form, as a new level of support, and really build out this base. So if we can hold this over the weekend, I think it's going to be a good start to potentially form a base to go up towards new highs early in November. So not too much has changed since yesterday, just kind of chopping around in this area. Now, starting off, we have CryptoRS who says the U.S. national debt just hit $38 trillion. The U.S. government's total debt just crossed $38 trillion. It's the fastest jump of $1 trillion outside of the pandemic era. We're talking about a number so big it's hard to grasp. It's happening as borrowing costs soar, economic growth stalls, and inflation pressures build. Interest payments alone are projected at $14 trillion over the next decade, more than 4 times what we spent on interest over the last 10 years. This isn't just a number, it's a flashing warning sign for anyone holding fiat, bonds, or assets that depend on government stability. When a balance sheet breaks, trust breaks, and when trust breaks, real stores of value matter. In that light, it's no surprise that assets like gold and Bitcoin are stepping into the spotlight. Because when the system shows stress, people don't look for yield, they look for safety, clarity, and autonomy. We also have Not Telling who says a Bitcoin can go down to 101K and market structure will still be intact. Right now, you're either bet bull market continues and we stay above 101K, or bear market starting and you get out. So far from what I'm seeing is the bull market will continue, but we'll let you know when the chart tells me otherwise. So that's pretty much what I was saying. We can still go down to 100K and the market structure will still be intact, but you really don't want to see it go below there, which is where the wick didn't even go below. So if we go back to Bitcoin here, the wick on Binance chart didn't even go below $102,000. So it wouldn't be ideal to have the biggest liquidation in crypto history and go below that afterwards. So it wouldn't be that ideal if we came back down here, because it would mean that, all this buying didn't really matter and that the market is so weak that it can go down below the largest liquidation in crypto history. So not ideal if we do go back down there, but technically on the market structure, we could still do that. Then we have Mike Novogratz, the CEO of Galaxy Digital. He says, I don't think anything fundamentally has changed in the crypto story. He gives a 6-week warning saying this.
Great start to the year, post the sell-off. Put in highs, Bitcoin got to 125, and we've had a real consolidation since then. The big deleveraging that happened a week ago, that's not good for markets, right? It wiped out a lot of market makers, means less liquidity. And you can see yesterday we were down and then up 4% and then right back down. And so there's a little less liquidity in the market. It took a lot of retail leverage out of the system. And so the good news is we're less leveraged. The bad news is when Humpty Dumpty breaks, he doesn't get put together right away. It takes a few weeks and sometimes months even for markets to heal itself and regain narrative and regain momentum. I don't think anything fundamentally has changed in the crypto story. Our government continues to spend way more money than they should. And I think as long as the debasement of fiat currencies goes on, crypto is going to be seen and Bitcoin is going to be seen. But, we're in a rangy, softer range right now. And I don't see what changes that. There's a bill in D.C. that needs to get passed, hopefully in the next 6 weeks. If that does, I think that'll give crypto a real jolt to the upside. That, and as we get closer, every day we wake up is one day closer to the Fed governor transition. And, my base case is still we get a much more dovish, malleable Fed governor than we've had in the past.
And moving on to our first altcoin of the day, we have whales and sharks holding between 100,000 and 1 million link continue to accumulate, signaling good signs of other things to come for crypto's number 12 market cap coin. So accumulation by these wallets are as follows. So we've seen in the past 12 months, 40 million link accumulated, which is a 28% increase with 103 more addresses. We also have Chainlink saying 24 of the world's largest financial institutions, one shared standard to solve a $58 billion per year corporate action problem, powered by Chainlink. And you can see here, Swift, DTCC, Euroclear, and all these other big financial institutions and asset managers. And then we have Sentiment sharing here's our crypto's top overall coins by notable development activity over the past 30 days. The first one is actually MetaMask, but the second one is Chainlink holding the number 2 spot. But MetaMask is actually on the rise here over the past 30 days. Then at the same time, Polymarket just recently launched a 15-minute up and down crypto prediction market, which is powered by Chainlink. So if you guess that the market is going to be up or down in the next 15 minutes, you can now do that on Polymarket with Chainlink. And then Chainlink shares this interview with Sergey Nazarov, the CEO of Chainlink, talking about what he's seeing at Wasahington D.C.
What was discussed during those meetings, and what was the sentiment from Senate Democrats regarding the path forward for crypto legislation here in the U.S.?
So I think there's a very strong commitment from Senate Democrats to get this bill done. I think they've invested a lot of time in it, and they're going to continue to invest even more time in it. So that's great. I think there was a recent leak of some of their DeFi ideas, which were early ideas, which has created, some contention and some friction. But that contention and friction, I think, will get resolved pretty quickly. The value of the bill and the value of our industry is so high that I think both the Democrats and the Republicans have enough of incentive to come together, which is how they both feel. I'm going to go to a big Republican meeting soon, right after this call, actually. And there, I think, I'll see a similar thing is a high level of commitment. So I'm really impressed by the level of commitment. I think the commitment is definitely there. And I think what'll continue to happen is they'll come together, they'll get past, this bump in the road and move on to make the bill happen. We're going to push the Democrats and the Republicans to work together on this bill. That's what we've been doing so far. The Democrats have concerns about illicit finance. The Republicans, have some concerns that I'll hear soon. We try to find creative solutions to those problems with them. We try to provide technological solutions and ideas that can assure them that blockchain technology actually makes illicit finance less likely, that assures them that, their concerns about how transactions work can be addressed correctly on chain. So that's usually the role that we play is we clarify what the technology can do. And usually once we clarify that, they become more comfortable with moving ahead and also pushing them, towards each other to collaborate on these things.
If you've ever wanted an all-in-one platform for crypto or even stocks, you've got to check out BitGet. Honestly, this exchange is changing the game. BitGet isn't just any exchange, it's got spot trading, futures, margin, and even copy trading. Plus, it supports a ton of coins and trading pairs, all with competitive fees. Security is taken seriously as well, with proof of reserves and a protection fund, so you can trade with peace of mind. And no other Tier 1 exchange protects your security this well. And one of the coolest things, BitGet is moving towards being a universal platform. That means you can trade tokenized US stocks like Apple and Nvidia right on the blockchain, all by using USDC without needing a traditional broker or leaving the exchange for another platform. And if you're into futures, BitGet Stock Futures lets you speculate on price movements with up to 10x leverage using a composite index of stock tokens. It's super beginner friendly and a perfect way to explore the market. Now getting started is easy. Sign up, do your ID verification, deposit USDT or USDC, and you're ready to trade. And by signing up for BitGet, you have the chance to earn bonuses up to $6,200. So try BitGet today and get your bonuses. Here's how. This is our link for global users. For our UK users, sign up with this link. And if you're on mainland and Europe, use this link to sign up. And then moving on to Solana, we have the Osprey Fund has filed an S1 with the US SEC for a spot Solana ETF with staking. We've seen a bunch of Solana ETFs which still have yet to be approved because of the whole government shutdown, but this one is now with staking as well. We also have Solana has more ETF filings than any other crypto since 2024, with a total of 23 ETF filings. Institutions want Solana, and we can see that because over in Asia, Hong Kong has just approved the first Solana ETF. We also have Solana has emerged as one of the most prominent blockchains. Its native application has generated $3 billion in revenue in the past year. Planned upgrades are expected to double the network's capacity by year end. So this is a report from A16Z, and Solana shared this saying, Solana is a hub for on-chain economic activity with rising throughput, cheap fees, and billions in app revenue. And then Solana Floor shares the total value of tokenized rolled assets on Solana has now surpassed $700 million, a new all-time high. The top RWAs on Solana are Ondo's US dollar USDY with 176 million and BlackRock's Biddle Fund with 175 million plus. Then we have faster than NASDAQ and faster than Visa. Galaxy Digital's head of DeFi says Solana is evolving from a blockchain into a global supercomputer. So he said this.
Solana is going to have the most powerful, the fastest, transaction and execution layer on Earth. We are going to move from a mere blockchain to something more akin to a global supercomputer, a shared state, a computer in which anyone can access, which it will be permissionless, and it will be faster than the NASDAQ, faster than Visa, faster than MasterCard. And when you factor in T+1 settlement, it's already faster. You're going to see Solana have 20 millisecond block times, multiple concurrent leaders. You're going to see Solana producing and executing consistently a million transactions per second. And that's not going to be just speed for speed's sake. It's going to mean that Solana is going to be not just competitive with the NASDAQ, but it's going to be something that the NASDAQ might want to build on top of. And so we think that is the markets will converge. DeFi will look more like CeFi. DeFi will look more like TradFi in many ways, but maintain its core characteristics because those are inherent to trading on a decentralized network.
And then also in that A16Z report, we have Say, and just in A16Z's report confirms that Say flips Sui, Polygon, and Aptos in active addresses for September 2025. Building on a strong Q3, growth on Sui has accelerated. DEX volume is exceeding $10 billion, 3 ETF filings, and tokenized funds from BlackRock, Apollo, and more now live on Say. And speaking on that, we have Laser Digital's tokenized LCF fund is now live on Say as well. So Laser Digital, which is a subsidiary of Nomura, which is Japan's largest investment bank, joined institutional RW offerings from BlackRock, Brevin Howard, and Hamilton Lane on Say via Kaio. And Gohan shares that Say has officially crossed $10 billion in DEX volume over the past 12 months. The network's growth curve shows a clear inflection point. DeFi activity is maturing, infra is battle tested, and capital markets are scaling fast. Institutional flow is coming in hot. So Say is looking good. It's one of the coins we think is going to do well once the market finally starts to turn and altcoins finally catch up. Say is one that I like, Chainlink's one that I like, and Solana also. And lastly for today, we have how Calyx is solving the $100 billion fragmentation problem of DeFi across 19 blockchains. So you see a project launch on Ethereum, but your asset sits on Solana. Now you face a choice: bridge your tokens and risk losing them to hacks or paying fees, miss the sale entirely, or spend hours moving liquidity across chains. This friction happens thousands of times daily across hundreds of blockchains, and it represents one of the most fundamental problems in decentralized finance today. Calyx, a cross-chain token launch platform built by Aurora, powered by Near Protocol's Intense framework, aims to eliminate this problem entirely. The platform enables projects to launch tokens across 19 blockchain networks simultaneously, while allowing users to participate in a single click from any supported chain. No bridges, no token wrapping, no multiple transactions, just connect your wallet, sign an intent, and receive your allocation. And the first project tested in this infrastructure is Intellex, an AI-driven protocol focused on cross-chain agent collaboration through collective memory. The Intellex token sale went live on October 8th, and it reached its soft cap, demonstrating market appetite for this approach. But beyond one sales results, Calyx represents a potential shift in how token launches work in an increasingly fragmented blockchain ecosystem, which is definitely something we need because it is hard. Like, for example, when we had the whole Astra launch on BNB, I had no tokens on BNB. And so I had to send a bunch of tokens over to BNB. And by the time I got stuff over there, the price had jumped 2x. So fragmentation is such a huge issue in crypto, and Calyx is aiming to support that. And so that is the video for today, guys. We're pretty much just chopping around this $109,000 level. Hopefully build this out as a support pretty much over the weekend, and then we can pump from here. I would like to see the Fed cut the rates at the end of the month. We'll have that in just a week from now. So the Fed could be cutting the rates by 25 basis points. Combine that with a market structure bill going through Wasahington D.C. right now. If that passes this year, just like when we had the Stablecoin Act, I think the markets will also pump. So pretty much it is just a waiting game right now as the market continues to chop. People think this is a sign of weakness as we go sideways, but really it just means we are kind of chopping everyone out and kind of building a structure. So don't mistake going sideways for weakness in the market. I don't think the bull market's over. I think we do still see higher prices in the future. So we just have to be patient and wait for those times. So that's the video for today, guys. I hope you enjoyed, and I'll see you tomorrow.